Start. Recording in progress. So, guys, we're here. Episode 6. Episode 6 is the second last episode of Inside the Vault. And we're thankful so much for Jonas for giving his time all the way here. It's been a beautiful journey. It's been a hectic journey because, scheduling and everything with Jonas' hectic schedule. It's amazing that he's actually had time for us and giving us tips on finance. So welcome again, Jonas, on Inside the Vault. So this is episode 6 of the 100 Days in Finance Challenge. And today we're going to discuss tomorrow's money, basically crypto, everything crypto, all the digital assets that people have come up with to sort of even try and charter a new way in finance. Yeah. Let's say that. So welcome, Jonas. Glad to have you here again.
Thank you, brother. Much appreciated. It's always a pleasure to share the experiences, the knowledge with our fellow people so that we are all equipped and enlightened in moving forward, especially when it comes to the world of finance, the world of banking, and making things simpler for everyone so that we are on the same page. Yeah.
So today we're going to basically break down tomorrow's money and how a new system of finance has come that is really putting the banking industry on the edge. It's changing the rules on how people store their wealth. So, first question is being, do you see crypto finance being the future, or is it just a speculative bubble that's going to burst eventually?
Well, firstly, truth be told, cryptocurrency, is an asset in that it's highly volatile, it's sentiment driven, and it's often speculative, right? So from that perspective, then that's how it is. And from an infrastructure perspective, this blockchain allows one to, allows peer-to-peer value transfer without traditional intermediaries that we already know and we spoke about in the previous episode. So the future of finance is unlikely to be fully decentralized, but blockchain as a technology is influencing how financial systems evolve, So Bitcoin itself introduced the idea of decentralized digital scarcity, and Ethereum expanded this concept by enabling programmable contracts. But all these things then that we should ask ourselves is, will crypto replace banks? Is that really the question? Yes, somehow it is going to replace banking. That it is gradually shaping the financial infrastructure, but it's not something that can happen in 10, 20 years, because even our current systems from a banking perspective are not there yet, and from different countries' perspective. Remember in the previous episodes, we spoke about reserve banks and so forth. We are still trying to make sure that our reserve banks are well aligned with regulations for each country and aligning ourselves with Trump's world, given that our currencies are well aligned with the dollar. So that is then how we find ourselves in a space where we can say, we are going there, but 20, 50 years, we'll still be going towards that journey, because
So,
yeah, yeah.
like, I you said something before, like crypto has is going to replace banks in some aspects.
Mhm.
Are those large aspects, or are they going to be integrated into the banking system eventually? Because
So,
which okay, let me just put it very specifically.
mm.
Which sectors have you seen crypto really hit banks like really hard?
so, 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 so remember, from a banking perspective or from a transactional perspective, and from where our journey started when we had discussions
Yeah.
and showing that your money is not in a vault. I mean, blockchain type of a thing is the same thing. All
Mhm.
these vaults are sitting somewhere on a cloud.
Yeah.
They are computerized. It's computerized systems. Our monies are on a computerized type of a thing, right? So with how blockchain is doing things and growing from where we are currently, and that's why I'm saying it will replace banks. I'm saying so because obviously by tomorrow, banks obviously will also try to build systems that will align themselves with blockchain type of transactions, right?
Yeah.
And in because remember, banks started as traditional banks, but they end up moving into other things, pursuing other things, um, creating other avenues, products that will be well aligned with the change that is happening in the world. And this is what
Yeah.
will then, in the future, make sure that when you are banking your money, you really never leave your house. And that's how banks will be replaced. Not in a physical sense of there'll definitely be no standard bank anymore. There'll probably be no more branches in the future.
So
But
like
a bank
the
will
way
not be
yesterday you said,
yeah.
when you said yesterday, like the branch system now being replaced by crypto slowly by slowly.
Yeah, banks are really moving gradually to digital platforms. We are encouraging our customers to use their cell phones. And people that are advanced are even telling you now that you need to have your bank on your finger. Elon Musk's are talking about the type of chips where if you want to buy something, you just use your finger or your head. You know, th-
Okay.
those type of transactions.
Yeah.
Yeah.
So I think we'll move on to the second question. What what risks or
Yeah, sure.
what risks and opportunities do the emerging tech space, especially in fintech, uh, present to traditional banking? Is it risk or is it opportunity or is it a mixture of both that emerging tech is presenting to traditional banking?
So, given your question of what risks and opportunities do emerging technologies present to traditional banking, right?
Mm.
We can probably then first talk and discuss opportunities uh, that are currently making the bank what it is. The faster cross-border payments. It's an opportunity for us to be able to engage irrespective of where you are in the world, right? And secondly, reduced settlement time. So in how we, even within your app today, when you are doing your transactions, you are at a point where you choose if you want to do a transfer to myself, you choose. Do you want this to be do you want the person to receive the money 24 hours or in 30 minutes or immediately, Those settlement times then speaks to the type of charges that one will adopt or take in a sense of making decisions when you are doing payments, Thirdly, opportunities will be based on lower transaction costs. Lower transaction costs are also critical in that customers, some are price sensitive, and due to being price sensitive, then based on the market, then banks build those type of products, specifically for the mass market, for the middle market, and then for your affinity customers, to make sure that everybody is catered for. So the type of risks that we would be facing from emerging technologies, especially from traditional banking perspective, I think one critical thing is regulation. So regulatory frameworks within our countries determines whether we will succeed or not. And remember, by virtue that regulations comes from our governments, not from ourselves, we are aligning ourselves with the government regulations. We are aligning ourselves with phase laws. We are aligning ourselves with laws that make sure that banks are run properly and the client is always, or the customer is always protected. So that's the type of risk that we also need to look at, because if regulations are eased or are made easy, then banks will face challenges when it comes to doing business. Secondly, cybersecurity threats is an issue. People lose money by virtue that other people don't even have digital apps. Some customers choose not to even have an internet banking. They prefer traditional old banking way of going into a branch, drawing your money and so forth, due to cybersecurity threats. Some people, when you say, no, you can use your credit card and buy things online, people don't feel they can do that because people get defrauded. People are sent links that put their money in a very compromising position. And another thing that we are facing, I don't know how is this in your country, Kenya, but in our country here in South Africa, there are incidents, especially here around Gauteng province, where fraudsters or criminals will hijack a taxi full of people, drive them to a certain place, tell them that everybody take out your phones, open your apps, transfer money, and then they transfer money to whoever. Because remember, apps to a certain extent, you are able to increase your
remove your app.
So I'm waiting. Talk to me.
Remove your app and transfer money to this account.
Open your phone. Take your phone. Open your banking app. Transfer money to this account. Yes. Obviously, because you want to leave, you will do as you are told.
Yeah, I get that, but you don't actually get that in Kenya. Like, music, like when a robber comes for you, he's come for your money. Now he will take your phone, and then now, okay, what happens? There's an incident that happened. Was it last week, part one? So what they do, instead of now going into the banking app, they go to your WhatsApp.
Okay.
They text everybody. I am in an emergency. Can you help me with 10K urgently? So after somebody has sent that, they have a window period of like 8 hours before somebody realizes because they do it at night. So by the time it's morning now, then Safaricom opens up. But going into the banking app,
Yeah, in our country, people do sinister things. So they
oh,
like literally that's what they do. They you know like a taxi taking people from town to the location. For them, it's an opportunity. They stop the taxi. Everybody inside the car, open your phones, transfer money, increase your limits. And that's why most of our customers are not so keen on taking these apps that we want them to take, because they feel they are
even
now being made
the
vulnerable, you know.
yeah, the criminals now know like
Yeah.
okay,
So cybersecurity, there's Capitec Bank. I
architect.
haven't tested, yeah, Capitec Bank in South Africa. I haven't tested that. I heard about the type of security that they have put in their app, so it's able to detect. Let's say, for example, you a criminal comes and say, "Hey, transfer money at gunpoint." When you put your finger for a biometric, their app is able to sense if you are scared, or if you are not yourself, you are not in a good space, and it will make as if it's transferring the money but putting it somewhere, you know. And then to fraudsters, the money would have left your account, but the bank would have put it in a freezing account somewhere, so that you are able to run away, or be freed, and then at the later stage, then they refund you the money back. So these are the kind of cyber securities that we need to use AI to our advantage, and grow our aspect of having customer at the center of security, having customer at the center of being protected at any given point. So this becomes a challenge if we really are trying to push these digital platforms to clients, and then on the other hand, they are being robbed. So another risk that banks would face is volatility exposure. So how volatile are you from a banking perspective when it comes to debt, when it comes to customers coming in, taking debt, taking overdrafts, taking loans, but end up not paying you back due to bad debt, and all those kind of things. So it is very, very critical and important that from a banking perspective, these risks are looked at, or they are checked, because they are very, very, it's very, very critical from a banking perspective to have this risk in mind. So yes, it is the truth that banks are built on stability. They are built on capital buffers, as we discussed, the other day,
Bonds.
and regulatory oversight, in a sense that we are trying to make sure that we align ourselves with regulation. So these are the kind of things then that we look at for all these emerging technologies, to see, as much as people are busy innovating and coming up with things, are these things addressing the issues, especially the risk part. So as I said, crypto ecosystems are still maturing in these areas of risks that I mentioned. And yes, we still need more people to innovate, to come up with ways to make sure that from a customer perspective, you are protected at any given point, to a point that if tomorrow we decide to use chips, or we decide to use whatever that we are using, that if somebody decides, no, Jonas, I'm going to cut his thumb because that's where his money is lying, then immediately, if you cut my thumb, then that thumb should die, in a sense that you shouldn't be able to do anything with it, you know. So yeah, the innovators out there have an opportunity to try and address the risks that I spoke about today, in making sure that at any given point the customer is not compromised, you know, and everything is well aligned with other things as and when they happen, you know, because it can really pose a challenge to our clients and what we are trying to reach from a banking perspective, because banks are closing branches, banks are trying to migrate or move their customers to digital platforms, to use other means of handling cash, you know. And by virtue that uh, Standard Bank is partly owned by the Chinese, and I hear that in China there are places where there's no cash anymore. You know, you can't see people buying using cash. It tells you that one of these days all the banks will follow suit. You know?
They go and then it's fine.
Yeah.
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 Yeah. So
that actually even goes to the next question. Yeah, I think it's a final question now.
okay.
When it becomes a question of multinational financing, so like central banks adopting decentralized finance, how will that affect the investment and daily transactions? As the last question, if central banks actually adopt it, yeah.
Well, let's call it like it is. There's no way that central banks are likely to surrender monetary control. It's something that can never happen. You know, as much as probably we have our way of doing things. You know, institutions like your South African Reserve Bank in our country is really currently exploring digital currency frameworks, right? And regulatory sandboxes and fintech partnerships.
Yeah.
But in it surrendering control of the money, it's something that will not happen. But they are really trying to find ways to make sure that they adapt. You know, they adapt new strategies. They adapt ways on how payment rails can be updated or strengthened. You know, they are looking at making sure that they strengthen crypto regulations. You know, already regulation is there. It's just that they want to try and align it with crypto strengthening ways of doing things so that clients are protected. Whoever that owns the systems are also protected, and everybody's able to get their share. If you know, that is something that is being looked at in the future, you know. And also the central banks are looking at implementing anti-money laundering controls, specifically when it comes to currencies, when it comes to crypto, you know, when it comes to making sure that at any given point, moving away from physical cash, we are still not opening another door for money laundering in a way, you know. And that is why I'm saying the future likely, as I said with your previous questions, this is a long journey, you know. So the future likely holds a hybrid type of a system where there'll be regulated digital currencies and controlled innovation environments. And so these things will dually on a hybrid basis try and work together to try and balance, you know, because innovation needs to have stability. You know, you can't just innovate things that are not stable, but we need to be able to innovate things that are stable and that can make our currencies at any given point be in a much better space so that everybody is well taken care of, you know. Remembering and considering that in our country We still have 11 languages where if we are really going to do an app in Swahili, an app in Zulu, an app in Xhosa, we are really, except if we really innovate and use AI to our advantage, for AI to understand all the 11 official languages of the country, but then be able to
Be
make
able to
this easy for whoever to
translate and give
translate.
them.
Yeah, yeah,
Yeah.
yeah.
I think they have that. I think they have that. There's earbud you can put that
Okay.
translates all the languages.
Oh, really?
All the language. Yeah, yeah. Even there's a Kenyan who innovated
Mm.
an app that translates sign language in
Oh,
real time. Yeah,
oh, oh, that's nice.
yeah,
That's nice. Then
yeah,
it means we are not really far. It means banks are really not that far.
yeah. I hope it can. They can bypass the bureaucracy
Yeah,
and actually implement, because 11 national languages.
yeah. It's a lot.
That's a lot. It's a
It's
lot.
a lot.
Okay. Thank you so much, Jonas, for your time today. It's tomorrow's money. I hope we can. At the end of the day, we are hoping we can accumulate tomorrow's money as much as we can today.
Yeah.
So I think this is the beginning of that. And thank you so much for your time, Jonas. Maybe you can tell the viewers something before we go.
Thank you, brother. Thank you. Much appreciated. We are pushing. We are going forward. We are doing this. We are going to make
Yes,
sure
yes,
that
yes, yes.
we reach all our
That's,
people. Yes, the energy,
that's the
keeping the
fight.
energy alive. Yeah, no,
Yeah,
definitely. And thank you very much. Much appreciated in sharing the insights with
yeah.
our people. Thank you.
Thank you so much. Have a great evening. And have a great weekend.
Sure, you too.
Uh,
And yeah, we'll touch base, my brother.
okay.
Thank you very much.